While the reason for the recent 6% drop in Tesla stock in a single day despite two price target updates is unclear, it is undoubtedly not due to the markets. Elon Musk sold off about $23 billion worth of Tesla stock to finance his purchase of Twitter and faced investor backlash for spending too much time on the social media company. But just 3 months into this year, Tesla was already the best performing S&P 500 stock year to date. This came after Tesla's shares fell to the lowest in 2 years, beating out Meta to become the worst performing stock in 2022 of the most valuable tech companies. Only pay a reputable investment management company. The price target set by Goldman Sachs for Tesla was recently increased from 200 to 225. Goldman Sachs research similar Dutch bank analysis was also maintained by Mark Delaney, who gave the stock a buy rating. Tesla was reiterated by Emmanuel Rosner, who also maintained a $250 price. Focus on the typical analysis. The average analyst rating for Tesla is a buy, and the majority of analyses have been rather bullish. The company's target price over the next 12 months is approximately $223.20. How has Tesla stock managed to perform like this, and how is it going to perform in the next few months? And what do these analysts think of it? Tesla stock price is currently above the 200 threshold and has increased by 8.95 over the past week and 8.67 over the past month. Tesla, keep watching to find out. But before we do, please hit the like button, subscribe, and enable notifications to stay informed about everything Tesla related. Tesla is more stable because of its high market capitalization and ranking in the top quartile of its industry. Compared to its competitors, the company has superior risk adjustment returns, return on equity, return on investment capital, and return on assets, and it has low debt, positive cash flow, positive free cash flow, superior revenue and earnings growth over the previous 5 years, and a high gross profit to asset ratio all point to superior long-term returns. Although a lot of people talk about Tesla's competition, it's crucial to remember that there are other EV manufacturers that have competition as well. Global EV deliveries from BYD decreased while those of Tesla increased. Although some analysis claim that the Model S and X missed consensus, and even though these two models are only a small portion of Tesla's car business, others do not believe that it is crucial for Tesla to get its delivery numbers as accurate as possible. Tesla recently released its first quarter delivery numbers, and there were no major surprises. In the first 3 months of this year, Tesla delivered 6% more of its popular Model 3 and Model E vehicles than in the same period last year, but the company fell 38% short of estimates once more. Analysis predicted that Tesla would continue to face pricing pressure in Q2. The electric vehicle giant's deliveries hit a record, but the electric vehicle giant fell short of estimates again. According to TD Cowen, Tesla manufactured 448,808 cars in the first 3 months of this year, more than it delivered. The excess production was caused by the increased number of vehicles in transit, and the Model S and X weakness was also attributed to the increased number of vehicles in transit. Despite the company's negative comments about Tesla, they still raised their price. When there is allegedly bad news, Target and Analysis raise price targets. Since the majority of analyses do not believe that Tesla's price cut is actually for the best, the debate over price history and general demand weakness will continue as long as production keeps up with deliveries. As a result, we have a good stock here. There is no denying that the price drop has made even ICE models comparatively expensive, and even EV makers are going to struggle to meet up with sales targets there. However, despite the ever-increasing commodity costs creating problems for used vehicle sellers, Tesla's recent price cuts have inevitably put pressure on competing automakers that produce more affordable electric vehicles. Although smaller startups from General Motors and Volkswagen are starting to enter the market, these Tesla rivals will struggle for some time to come as a result of the most recent price reduction. Currently, the EV market is quite volatile, but Tesla has the ability to change at will. Small wonder, since she is a fund manager, Cathie Wood has been reducing her other holdings while keeping Tesla. However, she recently reduced her Tesla shares so the stock could be within 10% of her portfolio. She later sold her Tesla share, and many people claim that even though she cannot purchase more shares once the stock reaches 10%, she didn't actually have to sell it because the price set by Tesla has made it much more desirable. Some startups might not be able to afford lower prices due to their exorbitant production and raw material costs, and much lower output than Tesla, which produced more than 1.3 million vehicles last year and is on track to produce up to 2 million vehicles this year. Tesla is making a lot of efforts to increase its production rate. According to reports, the automaker's Gigafactory in Berlin will soon grow to a permanent false production line and then change to increase output. According to some analysis, one of the reasons why Tesla stock is down so much is because short-term traders brought Tesla stock and they were planning to sell stock for the short term. He added that there is legitimate competition and it is becoming real, and that many analyses only think about this in the short term. They invest with essentially a one-year horizon, and they can trade out of these positions at any time. Tesla shareholders will soon have to accept the new paradigm as many new changes that the company faces are finally catching up to them. Stock levels are typically a concern for short-term investors, but for long-term investors, this shouldn't be a problem because the main concerns should be with Tesla's next-generation vehicle, its full self-driving software, and its energy storage. In recent news, Tesla unveiled a new charging system called the Cybervolt. According to Tesla, the Cybervolt is a single-phase 220-volt charging device capable and compatible with charging all Tesla models. The charger weighs 13 kilograms and can run a cable that is about 6 meters long. It also comes with installation included and supports plug-and-play charging, scheduled charging, or deeper. This is a reminder that Tesla does not really need to grow 50% yearly to achieve high market capitalization in the coming years. What are your thoughts on this? Let us know in the comments section below. Don't forget to let us know what your valuation of Tesla is, as well as if you want to know more. This device has an interesting value and is priced at an equivalent of about $8,000. At this price, Tesla will once again make additional revenue on its car sales in addition to FSD.